markets. Market watchers expect the choppy trading pattern that played out last week to persist this week ahead as investors continue to cherry-pick stocks with sound fundamentals. Meanwhile, the equities market opened the week in a green after the Democracy Day holiday. Ekene Oyeka, Securities Trader at Norrenberger, joins me now for more market updates. Ekene, thank you for taking the time. Thank you for taking the time out to join us.
Thank you for having me. Good afternoon.
Okay, we have about 4 trading days left. Talk to us about how investors are playing the market. You've said that they are cherry picking, bargain hunting for value stocks. Could you shed more light on that for us?
Yeah, currently, to start with, one of the things we need to get into consideration about what's happening in the market is as a result of the pronouncement from the president concerning the removal of the subsidy. We've seen so far concerning that particular news how the market has actually reacted to such information. However, that period of trading, we've seen a lot of stocks appreciating in the price. Let us look at the all share index as at that last week appreciated to like 5.37%. As against 55,082 in terms of the basics points. And also the indexes across boards, we've seen the banking shares all share index appreciated by 4.89%. Also, the consumer goods appreciated by 8.52%. The oil and gas appreciated as high as 10.45%. So we can actually see so far what informations in terms of the leadership can actually cause, what it can actually pull in the market. So seeing that kind of reaction, those sentiments also still playing out. Last week of the market trading to seeing such sentiments playing out. So we still expect to see the market correction by the end of this week.
All right, I wanted to also get your thoughts on your forecast for inflation for the month of May. We're expecting the data out before the end of this week.
Yeah, looking at what has actually happened so far, the increment in PMS, and also seeing a stable increase in terms of the purchasing manufacturing index too. What this inflation can actually impose in the market is we are going to look out for stocks. We have very good dividend yields that can actually create a leverage within the inflation results and also with the current situation of the market. So, however, given the fact that the inflation rate is at 22.2% currently right now, we be able to see some certain level of resistance in terms of the share prices that really happened. And we also believe that regardless of the increment in the share price and also with the increment as a result of what we're expecting from the inflation results, we can actually see that the economy is beginning to recover. Given the fact that during the first quarter of this year, the GDP actually experienced some cash crunch, which actually affected the flow of the economy. And given the fact that there's a stability in terms of the pricing, purchasing, manufacturing index, which has actually has brought a certain level of leverage in that space. So we believe that regardless of the result that's going to come out, there will still be a certain level of sustainability in terms of activities in the markets.
All right, Kenny, are you going to be reviewing your forecast for market return this year, year to date? I mean, the market appears to like the pronouncements that have come and some of the difficult decisions that this new government has taken, notably the fuel subsidy, and of course trying to address that the multiple exchange rates in the FX market. I mean, we're expecting perhaps more of that to continue when the president does have his cabinet in terms of market-based, market-focused policies. Would you be reviewing your forecast in terms of what this market could return to investors?
Yeah, looking at what the president, in terms of his key macroeconomic policies that he has brought out, one of them is removal of subsidy, unification of the multiple exchange rates, and also infrastructural developments. And all these combinations of factors has a way of creating a certain level of confidence for the shareholders. Because if you look at what's happening right now, we'll be able to see some quite interesting foreign participation right now in the market, and also we've been able to see some certain level of sustainability in terms of the systematic ways at which the market is actually reacting. So for shareholders who are really or are trying to look into the market, one of the factors they need to consider too is to look at how sustainable it is, and in terms of their returns, what returns can they actually get that is going to actually affect their investment policies. So yes, if these policies are being put together, being put in the right direction in terms of implementations, and also in terms of the direction as where the policies are going to go, and also when the new cabinet comes into place, all these things has a way of creating a certain level of sustainability in terms of how productive the economy will be, and also how far the market will be sustained given this level of bearish sentiments in the market now.
Right. Talk to us about the stocks that you like at the moment. Talk to us about their fundamentals and why they're top on your radar.
Sorry, I didn't get that.
Talk to us about the stocks that you like at the moment. Your top stock picks, if you will.
Okay, I will start with from the consumer part of it, which is actually Dangote sugar, and also Vita4. That is in terms of the consumer, for the consumer aspect of it, the consumer goods industry. Also looking at in terms of the banking stocks, we're looking at Assets Bank, for instance, the likes of First Bank Holdings, and also Fidelity. We've been able to see some little appreciations in terms of the price of Zenith and GT, which the advice we give to investors is for them to hold on to it to see how far the price can be sustained. So yeah, in terms of my stock picks for in terms of the banking sector, Access Bank is a stock you can look into, also Fidelity and First Bank Holdings.